So hi everyone, good morning. So basically today I'll go through the local bonds, the STI market, and then the energy sector. Why I think that there's so much room going ahead. So without further ado, let's see. Okay. So this is the monthly chart that I've shared during the Q2 outlook during that period of time. So you can see that we actually complete the wave one of the longest super cycle from the 1980s until 2007, where the height of the financial crisis happened. So during the bottom at 2009, subsequent recovery by the QE1 in the US, it actually propped the STI back above to above 3,000 level in 2010, signs of a good recovery. So, but if you look at the longer trend, all right, I plotted out a five-way symmetrical triangle, and we are actually at a wave C of it. All right, so the super cycle wave 2 is tentatively over here, but how do we confirm this is when actually the first sign is it break above 3005 very strongly. That's the first sign of it. All right, then secondly is if after breaking 3005, should there be a correction? It shouldn't cross below 3051. All right, that's the second sign. Looking at the overall bigger picture, our long-term target remains at 3005, like what I mentioned earlier. All right, but 3005 is still a bit tricky. First, if there's a strong selling going forward, then there may be a consideration that the wave D is happening, and then it will continue a one more down wave to 2005 at a major support zone before rebound up to complete wave 2. So currently we are not sure whether is there any strong upside yet. So these are the key level to look out in the ultra long term in this retrospect. Okay, so 3005, and then immediate resistance zone at 3250 is likely to be broken in the near midterm to short term. All right, so moving on to the weekly chart. Sorry. Okay, so the weekly chart, you can see that the uptrend is kind of like confirmed after making a series of higher high, higher low, higher high, higher low, higher high, higher low. And despite the consolidation of the panel over here, STI has been going a range bound market since June 2021 this year. And but the good news is that despite a very strong pull down, a pullback in May, all right, it actually is well supported at the downtrend line. All right, it still stay elevated above 3,100. Price subsequently make a very like sluggish kind of upside move, targeting resistance zone 2 at 3,002, and then after that price remain above like 3,000, between 3,000 and 3,001 arena and region. Okay, so this actually like, you know, it is like we are like going into a very like, you know, a confusing state, sluggish state. But yesterday, as of yesterday, last Friday, yesterday is Friday. All right, the market closed with a very strong bullish candle. It's looked like a hammer, and especially is above support zone 1. You can see the weekly bullish rebound that I wrote, and then the circulation that I put over here. And likely, if you're going to break 3,002, then we are confirming the pennant pattern, and then we are likely to reach earlier than expected at 3,004, and then subsequently at 3,005 resistance zone 2 region over here. All right, furthermore, the pennant pattern, it looked like a symmetrical triangle from the money chart. All right, this actually is a very strong high probability type of bullish continuation pattern that we are looking at. Okay, and then on the daily chart, now I move on to the daily chart. You can see that the pennant is very like, you know, plotted nicely. Ichimoku is no longer showing any threat of a continuation downside. Okay, that's the first thing. Second thing is the price has closed consecutively 3 period last week, above the Tenkan Sen and the Kijun Sen bullish crossover. Even the lagging span, which is a black line over here, pardon me, is a bit small. That's the best I could, but it has returned back into the range of the candles. All right, and then so despite prices prices like trending below the cloud, it's slowly aging back into the Kumo. All right, the only concern that we have right now is the Senko Span A. So Senko Span A, you can see is the bottom, like purple, like highlighted in purple. Senko Span B is the one in green. So you can see that the tick Kumo is still like really a strong resistance going forward. It's like kind of like moving resistance. All right, so this is the only concern that we have. So therefore, on the daily chart, it look almost like range bound. Okay, so I'll move on to the daily price action. Okay, when I remove all the Ichimoku, so I plug in the moving average. Moving average looks good. Prices have rebounded and then stays elevated above the 200-day moving average. You can see that the 50-day, which is the blue line, and the 22-day is actually the green dotted line. Prices has remained elevated. Another thing is the neckline resistance of the inverted head and shoulder has broken slightly. It barely closed up above the neckline resistance, but it is a good signal and a good sign going forward. Okay. Another thing is the falling wedge has been like broken out, and then this is the first initial sign that the bullish upside has like temporary return, added confirmation, added confidence of the upcoming bullish upside. Okay, but the one thing to take note is next week Monday it should open up above, preferably a gap up above the neckline resistance. All right, that is the very good clear signal that the SDI based on the technical chart has returned back to the bullish signal in regards to that. All right, let me bring you back to the MACD indicator. So the MACD indicator traditionally only when it close above zero line then you go into the buy. But however, I think that in terms of anticipation, the histogram between the MACD signal lines and the fast line, okay, has been like sorry, give me a moment. Yeah, so has been showing a very positive sign above zero line for the histogram. So and then after that we have a cross like on September end. So if like what I say, if there is a gap up above the neckline resistance, there's a possible chance of the MACD and the signal line crossing above the zero line, and then this is a sign of a bullish upside going forward. Okay, so yeah, so with that I end off my presentation on the SDI, but I'm moving on to the give me a moment. The S&P 500 energy sector index. The energy sector has been ongoing very strong. You can like what Paul mentioned that the winter is coming. The supply chain, all these are being quite affected, and yeah. So it all in a nutshell, yesterday it was a very good in fact it's this morning when the market closed at 4 a.m. local time. You can see that there's a strong bullish upside above the resistance zones. Okay, breakout from the falling wedge, inverted head and shoulder, confirmed way above the target. And then you can see that there's a strong bullish crossover. There's a triple bullish golden cross. This is a term I give to myself. First of all, not only the 50-day moving average cross above the 200-day, it also the shorter term 22-day moving average has already crossed both of them at the same time. So it indicates a very strong bullish confirmation going forward. All right, falling wedge has price has crossed above the resistance zone. Means that the resistance zone now officially has become the support zone. Likely I'll see maybe in 2 to 3 weeks time we will see a target of 450 for the S&P 500 energy sector index. Okay, so moving back to the local bulls, since the energy sector is doing well, we have Rex International. All right, Rex International, I issued a report on March before. So if you're interested, you can go to stocksbnb.com to revisit, or you can drop me an email. I send you the link. All right. Basically, the major resistance turn support zone has been broken. All right, that's the first signal of a sign of a bullish signal. Um, and also there is a ascending triangle that is being confirmed. Broke out and then target at 0.25. Despite a sharp pullback, all right, throwback, I mean, all right, there's a deep retracement into the ascending triangle. But the good news is that price has already rebounded twice, and then break up again, and then retest the ascending triangle support. Furthermore, I think yesterday bullish signal has returned despite a bearish dark cloud cover over here. So in this retrospect, I think that 0.25 will be broken, given the fact that energy sector is especially the oil sector going ahead into the winter. We are seeing a strong upside for the oil-based kind of counters in our local bonds. All right. Okay. So Wilmar is the next one. Wilmar has been on an ongoing downtrend since he hit $5.50 twice. All right, the divergence, bullish divergence, and then price goes down. Ichimoku indicator has shown 2 out of 3 golden cross. Is there's a Japanese term for it, but I'm not going to say it because I'm very bad at pronouncing words. You guys may laugh at it. But anyway, back to the price action. 2 of the 3, what is the 2 of the 3? First is the Tenkan-sen and Kijun-sen has a bullish crossover. Furthermore, added in is the Morningstar has broke above and gap up above the Tenkan-sen and Kijun-sen. That's a very good signal. Actually, within a day, it closed above these 2 important signals. Our second signal is the lagging span above the candle. This is by far, I think, the second most important thing that that a lot of people who are doing Ichimoku, they tend to overlook. But this strong upside actually is very, very crucial. And furthermore, if you look closely, the distance between the lagging span and the current candles, you can see that there's a very a significant gap. So the gap, this distance of the gap is signify a strong, very strong bullish impulse going forward. And then despite yesterday price actually came down, it rebounded at the neckline resistance of the inverted head and shoulder. If everything goes right, Senko Spanny might goes up higher, and then there's a bullish Kumo twist, and then we are seeing a price targeting a resistance zone at $4.60 to $4.70 in the short term. All right. Another thing is the intermediate downtrend line has been broken. This by this upside. So there's a lot of huge span between the intermediate and the primary downtrend line of movement. So you can see that a higher probability that price will move around this region. All right. So move on to the next one, golden energy and resources. Do take note that this counter actually on the very long term on the weekly chart is actually on the downside. All right. Recently, because of energy returning, surging up, all right, based on sector rotation and stuff like this, prices has already broken the new high based on the daily chart. One thing to be crucial is for golden energy is price already has is hovering within the resistance zone with an expansionary target zone of 1.618 and 200% expansionary level of 0.26 to 0.350. So if you can look at my mouse, this is the expansionary 1, 2, and 3. So that's how I came up with this zone and levels. All right. I take a step back. And then I plotted out a range. So our target remains at the extension target zone at 138.2 to 161.8% extension level of this range. All right, over here. So likewise, I think there might be a correction, consolidation, I mean, over at this zone, and then before going up to target this. All right. But not very strong on golden energy, but I'm quite strong on geo energy resources based on the price action, based on the technical and based on the volatility that it presented. All right. First up, you can see that the falling wedge has been broken. Rounding bottom, cup and handle formation has broke into a support and resistance zone, making a series of higher high and higher low. Okay. This bullish candle, I want to bring attention back to this bullish candle for a very specific reason is this bullish candle actually closed above the upper Bollinger Band. You seldom see a very strong bullish upside. So traditionally, when John Bollinger construct the Bollinger Bands, there's specifically a buy signal is when price actually close above the upper band, then you initiate a buy on it. All right. So but this time around it gaps up and then it moved up quickly into a resistance zone. Strong bullish candle. So momentum wise, we can see maybe there will be some sort of consolidation before rebounding to break to the upside. Our long-term target, we are seeing 0.5 to 0.55 region in the longer term for that. All right, so with that, I will end off my presentation. I'll pass my time back to Paul for the sector trend. Paul, to you. Thank you.
Yep.